Hey, everybody, all you trader nerds, welcome into Monday session. It is August the 2nd, 2021. Happy birthday to Ain't That Old yesterday, turned 78. Uh, One of the best women on the planet. So got to wish her happy birthday yesterday. So it is August, y'all. How about that? So welcome in Dwayne and Drew. Drew, I ain't seen you in a long time. So welcome in. Laurent, hope I'm saying that right, Laurent. Rick, I missed you last week.
Yeah, last week was busy. Sorry, Bobby.
No, that's fine, Rick. Was it busy with work or whatever? Y'all, Rick is retiring. Are you still retiring in November or what?
I'm retiring in December, and yes, it was work. It was just real busy this week, last week.
We'll tell them to slow it down just a little bit. Jason is with us. Jason is our superstar programmer who has done so much for us lately that we showed off last week. So good to see Jason and Rod with us today. And there's Ken coming in. All right, Ken, the man. Oh,
Good morning.
Ken loves stirring it up on Facebook. I do too, Ken. I get people so mad at me sometimes, and I always love your Facebook posts and everything. So welcome in, everybody. Hey, the market's crashing all of a sudden. Check this out. This wild. We were up like 0.6% earlier today. Now we're down a point. Crash, 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 baby. That's why I played Blackberry Smoke. I feel a good one coming on. I feel a good one coming on at some point. We don't know where. We don't know when that it's going to come. But let's look as I always train y'all to look. First, we look at AD, advancers and decliners. This was at 200 and something today, 200, 300, earlier today. Now the AD is at 34, so it's still positive. This is a little AD chart. Cool thing about it is every time you see a red little dot there, that means that's the low of the day. So check out, AD is continuing to make low, low lows. So when ADs continue to make lows, what happens with the market? Market follows. Let's see where we are. See the purple line? Purple line is the overnight low. So we just took out the overnight low of last night. WP is weekly pivot. I think that that's just a pivot point there. Went slash right through it. Cash open was here. We are under VWAP. We had a 15-minute range of, we had a 15-minute opening range of, kind of small, wasn't it? So about 10-point range at the beginning of the day. That's the shaded area. And so it looks like some little pivot point here on my chart. We're finding a little bit of support there. So we'll see if it continues to come on down. You notice on this little dive down here that we've got some increasing volume. We see the volume that is red shows the down volume, green shows the up volume. The green came in there a little bit, showing a little bit of support, but kind of cool stuff in the market. And Red, what are you doing? They go to school tomorrow. So happy. So happy. All of them will be in school tomorrow. It's going to be so quiet around here. All right, as summer gets over. So, I caught myself this morning, and I think it's one of the products of me running AIM. Now, I noticed some people in the chat said, man, Bobby, you use a lot of words that we don't know what they are. Okay, so we run all kind of different strategies here. One of them that I've got running in this portfolio is AIM, which is Robert Licello's automatic investment management strategy. So what I've done is I have chosen 12 different underlines in which to put some positions in. And most of them, 10 of them are leveraged ETFs.
Dad, can I have a picture?
Yeah, you can have that picture.
I want another picture.
Okay, we'll get it, baby.
Where's the...
Get your picture, baby. Beth, get them out. Okay, go. All right, so we've chosen 10 to put in here. And then I bought O, which is a real estate investment trust that pays me a monthly dividend. And we got some a little bond fund here as well. So we started AIM in this particular portfolio. We've been doing some BAME on it, and I don't want to get y'all confused. BAME, AIM, whatever. AIM is Robert Lucello's method, and we started it on the 19th. So we've made, just a couple of trades since we started the 19th. And the cool thing is that since we started that, let's see, the dashboard, we're up about $2,400 since the 19th on a $50,000 account. So that's pretty good with our AIM stuff. So our AIM's doing well. Now, I was excited this morning because first thing I do when I get up is I open my spreadsheet up and I look to see if I'm getting any triggers to buy or sell any shares. And I got a trigger to sell 2 shares of UMDD. So UMDD was up pretty big and it said take 2 shares, but I didn't do it because I try to do this during our session together so we can always see this, at lunchtime. So since that time, the market's gone down, UMDD's gone down, so I didn't, get to take that trigger, but no problem. But if you are the type of person who you've got a full-time job and you don't have time to manage a portfolio and you want to do something that is relatively safe and will only give you signals to sell when you could book a profit, and it will tell you to buy when an asset goes down in value. And this is a really cool thing that you could do and implement. And as long as you've got access to your spreadsheet, you can open it up on your Apple iPhone or whatever your mobile device is. You can save it there, open it up. I guess you can open it up. I don't know if it's the problem is I get my signals from this is hooked up to Thinkorswim. So I guess if you open it up on your mobile device, it's not going to be bringing in that stuff. So maybe you do need access or something, or we need to figure out a way. If you can open Thinkorswim, we got to figure out a way to maybe get this data in here. But this is a really cool way of doing it. And the thing is, you don't have to do like I do and look at it every day. So if you want to look at this, once a month, once a week, once every 2 weeks, it's a really kind of cool way. And it will never, I say it will never, I think I've designed it where it will never tell you to sell something unless you're able to book that for a profit. It will never tell you to close a trade at a loss. So what we decided to do is to put 80% of the portfolio. Right now it says it's 79% of the portfolio, but we decided to put 80% of the portfolio into these underlyings and to buy the stock. Now I do need to make you aware of something as well, because this drove me crazy. And I noticed it on our session Friday, but I didn't bring it out loud. Probably my fault. What you'll want to make sure that you do. Now this is a different account. Hold on a minute. Let me explain the thing just for a second. Okay, sorry about that. One of the things that I noticed is that the shares that I had in this account now this is weird, y'all, but my UMDD shares, this says I have 149 shares, right? Well, this is a different account. This says 128. But in the actual spreadsheet, my spreadsheet says that I only have 93 shares of UMDD. But actually, Tastyworks is saying I've got 149 shares of UMDD. And I'm like, what the crap? Why is it wrong? So I had to go back and review all of my orders to make sure. And indeed, I only have bought 93 shares of UMDD. But look at this. Tastyworks has me with 149 shares of UMDD. Then I noticed in another one, UDAL, I should have 28 shares of UDAL. Now, y'all, I've looked at every order since the beginning of the year. I only own 28 shares of UDAL, and they've got me with 57 shares of UDAL. So it's strange. They're giving me extra shares, so I need to contact them. But my original thought was that I had not recorded all of the purchases and sales correctly in the spreadsheet, but I have. So it's kind of weird. So you want to make sure you keep an eye on that, right? So UMDD, occasionally double check, make sure you got all of the, let's see, UMDD, let's go, AIM, UMDD, how many shares do I have? UMDD, there it is, 128 shares, right? So that's right. So I checked this account and all of them were correct. So you want to make sure that you're, because if these quantities of shares that you have are not the same as your spreadsheet, you're going to get some bad advice coming from the spreadsheet. So you got to make sure that you record all of those trades. So we're at 2,300 on that. You can see that our
Is
biggest.
your Tastyworks AIM also, or is it only BAME?
Okay, so Tastyworks, this account is BAME, right? So I'm using BAME in Tastyworks. But the cool thing is that the spreadsheet still on this page does keep, the correct amount of shares should be here. So BAME is different from AIM, y'all, and I know that's confusing. God is my witness, but we'll cover it for some of y'all. But if you are a full-time employee, you've got a 9 to 5 somewhere, you're working at the factory, and you want something that is low maintenance, then this AIM is really, really good. It tells you what to do, so you can come in, in the evening or even after work, and it should still give you the signal, and you can put in the order for the next day, whatever. So this is a hands-off investment management. I like it a lot. I just completed Lucello's book, I think for the 4th time. I think I've read it 4 times. So if you want to read about this, all you got to do is go to Amazon, and there's a book, How to Make $1 Million in the Stock Market Automatically, and read the book. Stacy says it's a tough read for her because, and Ken does too. What did you say, Ken, about the author? You said something about the way he writes or something. I can't remember. You use big fancy
He's a bit
word.
pretentious and full of himself.
Yeah. Okay. So pretentious and full of himself.
Now, there's another place you can go. If you handle unlimited, you can read where are all the customer, or here are all the customer shots. There was a book a long time ago written called Where Are All the Customer Shots, which was an expose on how the brokers rip you off. But somebody wrote a book entitled Here is Where All the Customer Shots Are. And it's this fellow out of Dallas, Texas, that he's got a little website where he really promotes the AIM. And he's written 3 books you can get. They're pretty much promotional books, but you can get the AIM program from him for nothing. And if you go to Scribd, SCIBD.com, they got some of that stuff in PDF form for free to download.
Yeah, so if you'll just do AIM investment strategy, Google, you'll find all kind of stuff on it. Now, what I did, and I looked over my formulas over the weekend. So in this spreadsheet, y'all, I pretty much did exactly what Lucello said by placing, and you'll see a lot of hidden columns here, where I did the formulas to, make this as simple as possible. He was doing it on a 3x5 index card. And what I did is I did my own little tweak on it, though. So I don't want anyone to think that this is exactly the way he said. So what I did is I came in and I said, look, if you have a streak, and this calls a streak, right? So right now on the UCO, our streak is we've got a, well, we don't now. Yeah, it's got a selling streak, right? So we bought UCO to start the program, right? So that was our first trade. We bought 38 shares. Then our next trade was to sell a share. So we took some profit off. And our next share was to sell another share on the 29th. So we did that on the 28th and 29th. We got 2 signals. So we sold a share, book profits. So as you can see, our streak now is we're on a selling streak, and we have sold, our last 2 orders have been to sell. So that's why this says S2, S2. So when you S2, I created a restrictor plate, a governor, so to speak, like on NASCAR races. So if you've got a buying streak or a selling streak of 2, then it throttles you down a little bit. So as you see, UCO now, the governor decision has gone from 0.1 to 0.15. So then it uses 0.15 into the figures to kind of slow your roll a little bit, right? So it slows that down as you continue going. So if we had 9 sales in a row, right? If all of our trades were sales on UCO, then that governor would change to 0.5 instead of 0.15. And it's just slowing down the activity. So that's kind of my own little tweak on the AIM program. So if you're using AIM, figure out so let's say you got a $5,000 account. What you would do is you would put 80% in a basket of ETFs or stocks. Say you like Apple, even. Apple be a good. You want things that move a lot. So pick you 3 or 4 stocks on a $5,000 account. Put 80% of those in stocks. So record your purchases there. Keep 20% in cash. And then this little puppy, y'all, will run itself. It'll tell you exactly what to do. It'll tell you exactly what to, when to sell, when to buy. Cool thing is that it's automatic. Now, the bad part about it is you would be trusting me, right? Who is the goofiest person on the planet, to make sure that these concatenations and lens and roundings and all this kind of stuff in here is actually right. So, I guess buyer beware. I mean, this is free and available for you, but just keep in mind that, is it possible that I've made mistakes? Oh, it is, right? But so far it's working good. Oh man, we were up $2,500 earlier today. The market keeps crashing. Now we're only up to 2,100. So, but what I like about this is I wake up in the morning and I go, I want the market to either be up big or down big. Why? Because this is going to give me signals to buy and sell different underlines, right? As movements happen. So you want big moves so that you get, nice little signals here to take action. I just like it because I wake up in the morning and I go, I don't know if I want the market to be up or down. It's fun because as the market goes down, we're buying. As the market goes up, we're selling. Now, I don't even want to talk about BAME too much, but there's another one that you could use. If you're not using AIM, you could use BAME. I'm not going to talk about it much today. We'll do it on Thursday during our normal time. But BAME is a little bit different and a little more intensive. So you got a full-time job, you don't have enough time for that, then, whatever. AIM, now here's what I like about this, Matt. Let's talk, Matt, my man. Matt, let me hear your voice, baby. Can you talk today as a boss in the office? Matt, I can only whisper. Or he may be out on he's typing. Let's see. Matt says boss is here. Okay, so we won't bother Matt. But what I like about this, Matt, is you're there with the boss and you wait for a signal. You can even check it when you get home. And if it tells you to sell something, you're booking profits. It's never going to tell you to take a trade that is not a profitable trade. Isn't that cool? So all you got to do is wait it out, so to speak. So what I did is I want to test this on TQQQ, just see how it did. So I've downloaded TQQQ historical data, which is the 3 times ultra NASDAQ, to see how this puppy would have performed like over the last 5 years. So I try to, do a little back testing when I get a little time and see how that works. But I'm telling y'all, for those of you who, you go, I don't want to work with options. I don't want to work with anything. I need a set it and forget it portfolio. Man, this is cool right here. This is really cool. And we've got some big movers. So hopefully we'll get some, buys and sales. So I don't care if it's saying buy. I don't care if it's saying sell. It's looking out for me and automatically managing my portfolio. All right. I'm going to give you another resource. So that's How to Make $1 Million in the Stock Market Automatically by Robert Lucello, the cheesiest of all titles. Where is the spreadsheet available? I don't see it on Discord. I think I did put it in Discord. Or no, I didn't. I didn't put it in Discord because it's too big. Jason, will you help me figure out how to? Jason's our director of technology. So Jason will help me figure out how to share that. I think we're going to do that on Google Drive or something. Didn't you have an idea on that, Jason, or something?
Yeah, we should share it on the resource along with the BameBot stuff.
Okay, so we'll do that. We'll share that and figure out how to share that so you can open this. So then, Lauren, if you want to set up your account to do this, I would recommend, let's all slow down. Let's read the book. If you can't do anything, then read chapter 6. Chapter 6 is where the guts of the book are. Oh, that's so pretty, baby. Give me hugs. She called me pictures. So And then what I would do, Lauren, when you want to implement this, just get with me and let's do a one-on-one session, and I can help you and show you how to record the trades and how to get in this and how to, to manage your portfolio doing this. So this is just a really, really cool little way of, doing some automatic portfolio management, because the key is if you've always been a buy and holder, you buy and hold, you never know when to sell. So, my stock goes up for 5 straight years and then all of a sudden it crashes in year 5. Well, you just lost all that appreciation. So the cool thing about this is on the way up, it's having you book profits. And on the way down, it's having you to buy additional shares. Remember the other day, I had 706 shares, total shares of stock and ETLs. Now I'm down to 699. Why? Because the market has gone up and we have liquidated 7 shares and booked profits. So really, 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 really nice way to manage a portfolio. Okay, so let's move on. I'm going to give you another book recommendation for those of you who are readers and like to read. I bought this book in April. I bought it in April 6th and didn't even read it until the weekend. So I hopped on this on Friday and started reading it. It's a pretty good book, pretty easy read. It's called Intrinsic, like intrinsic value. And I love the way people sell books, right? Using leaps to retire early. Well, that, jumps to you, right? First of all, you got to figure out what is a leap. And then here's what catches everybody. Everybody goes, oh man, I'm going to retire early. I'm going to be like Bobby. Bobby retired at age 50, in May of this year. But did I do it by doing leaps? No, I didn't use leaps to do that. But this was an interesting read. So, I got the paperback version. Intrinsic would be a good little book for you if you want to read. And let me just give you the premise of it. I can tell you the whole book in one little swoop, and this will make so much sense to you that you'll go, my gosh, why have I not been doing this my entire life? So basically, oh boy, Mike Wynn says, don't you say the W's or the Y's is W's or something? I think that's right. Or is it? I'm not sure. Y'all, I'm from Ranburne, Alabama. We have no idea how to pronounce the last name. But what it basically says is this. Oh boy likes technology stocks, right? So he's liking stuff like, let me get this little watch list over here. So here's like monsters of tech watch list that I've got created, right? So I've got Apple, I got Microsoft, I got Facebook, I got Netflix, I got Tesla, Google, Amazon, whatever the monsters of tech, the FANG stocks, so to speak. The stocks that we believe are going to increase over the next few years. And I dare say that there's not one of us here that don't think that any of these companies are not quality growth companies. But most of these we would consider to be high growth technology companies. Whether you like them or not, that doesn't matter. But I think that, I use Amazon all the time. Am I a big believer in Amazon? Oh, heck yeah. We buy so much there. That's where I bought my computer that's coming that Jason shamed me into buying. No, I'm just picking Jason, but I am glad to get it. So hopefully it'll be here maybe this week or next week. Not exactly sure. So, I use Facebook like crazy. I'm on it all the time. It possesses my life, so to speak. And we watch Netflix every day. Right now, the show du jour is Greenleaf, about this church, this mega church, and the pastor and their dysfunctional family, which is a pure gold job. It's even got Oprah Winfrey in it. I don't care if you like Oprah or not. She does a pretty good job of acting in this. So we're watching the Greenleaf show. It's kind of funny, right? Because they're thinking about integrating the black church with the white church, and the black people don't want the white people coming to the church. It's awesome. I just love the show. It's called Greenleaf. Tesla, do I care about Tesla? I will never drive one because they're not environmentally friendly, right? I like gas guzzlers because they're better on the environment. Have you seen what those poor batteries do to the environment where they strip those lands? So we don't want to, I'm just joking, whatever. I don't get into the environmental argument. I'll be burning tires this weekend, trying to pollute the environment. So, you got all these things that you would go over the long term. These are going to be really, really strong companies. Now, these are the same companies today that was, you know, Exxon Mobil, IBM, General Motors, and the Fords of the 20th century. So the Industrial Revolution, you know, you got JP Morgan, you got all those people, you got oil, and you got all these companies. Well, now you and I live in the information age. And think about how many of us worked from home during the pandemic. You got Zoom, you got all of these, you know, tech companies, and people found out that, you know, we are an information technology driven society now. And there is a good chance that over the next 20 to 30 to 50 to 100 years that, you know, these are going to be strong companies that, you know, maybe some are in their infancy, like a Tesla. Right? It's still young, still a young company. Apple, you know, I mean, probably not what it once was. Their, you know, big announcement is, hey, now you can get the phone in purple. So when's the really last time they had a big, you know, tech revelation? But let's say you like Apple, and Beth's got an Apple Watch. We've got 4 Apple phones in my house. So I'm an Apple customer. Am I a Microsoft customer? Yeah. I got the Windows in here, and the best video gaming system on the market, in my opinion, is the Xbox stuff. So we love that. And I love Facebook, and I love Netflix. Do I use Google? That's my search engine, baby. Now, you know, I've been trying to go more to DuckDuckGo because I hate giving Google money for some reason, because, you know, they'll, on Easter, they'll put, you know, they won't do anything. But if it's on some ungodly holiday or some, you know, whoever obscure person's birthday is, they go all nuts and change it. But, you know, let it be the, you know, the holiday on the crucifixion and resurrection of Jesus Christ, you know, they won't do anything. But if it's some obscure whatever holiday, they'll celebrate it right along. So, you know, then Amazon, I'm buying everything in my mom on Amazon. By the way, let's see our computer I bought on Amazon. Hold on a second. Let's see if I can see y'all. Orders. Where's my orders? Orders. Returns and orders. Here we go. I'll show y'all the computer I ordered. Got dog food coming. Here it is. Now, it's a refurbished computer, but I think it's going to do what I need to do, right? $452. I thought, what a deal. So, blah, 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 blah. That's what I got. 32 gigs RAM, 1 terabyte of whatever that is, and blah, 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 blah. Renew. So hopefully I had pretty good reviews, so we'll get that for $452. All right. So the guy's premise is this, y'all, and I think you'll like it. So what you do is you wait on a big day when one of these things is down. Well, and let's do, because really the cheapest leap options would be in something like Apple, right? But this, when I show this to you, you're going to say, man, that's just beautiful. All right, so let's go to the trade tab and let's pull up Apple. So let's say that we get a major correction in the market and you still like your Apple iPhone and you know, hey man, I'm going to still use this thing. So let's say the market goes down, you know, 5% in a day or 10% in a day, and Apple goes along with the market. So goes Apple, so goes the market. And so you're looking at the percentage change. Now, today would not be that day, for example. And he didn't say do this on corrections, but this is just my little take on what the old boy was doing. So I would say wait till Apple has a good down day. I mean, a really good down day. I mean, 5-10%. When's that coming? I don't know, but I'm in no hurry, right? I think Apple's going to be here for the long run. And then what you do is you go out here and you buy a leap, you know, 2-3 years out. So that's June 23. That's 2 years out. You could go September 23, a little over 2 years out, till you go, you know, to a long dated expiration. Now, the longer out that you go, the more you're going to pay also, right? But he was going out here. And remember, normally I don't do leaps. Leaps, let's say, would be options that are over a year out, over 365 days. You see me, I like going, if I'm going to do something leapy, I go out about 6 months. But let's pretend we're going to do what old boy says. Let's go out to a long dated 2-year option. So let's pull these up. I don't want you to not buy old boy's book, but I'm pretty much giving you the whole should be all right here. So let's say, normally if we're going to buy an option, and we don't like buying options most of the time, but you believe in Apple. So when is the best time to buy a call? Well, the best time to sell a call is on an up day, right? Market goes up, so that means you can sell farther away from the money. Market goes down big, and that's the time that you would buy an option. So let's say that you went in here to right here, about a 74, 75% probability of being in the money, and you go out here and you're going to buy an option. Now, gotta play with me here a little bit, right? So that's going to be $6,180 for you to do that. Now, keep in mind, if you were to buy 100 shares of Apple, well, that's going to be a lot more, right? 145 times 100. So here we're just buying about maybe a 72 probability, 74 probability of being in the money. So on that down day, you're going to buy a call. So you buy that call anywhere, I would work it from the mid price first, then go to the net price. But let's just look at this and see. So here we go. Max profit is infinite. The max loss, you can only lose what you paid for the option. And it gives you a break-even stock price of 151.80, which basically is the price of the stock plus premium received that gives you that number there. So he would say buy an option that is not greater than, the break even is not greater than 5% of the price of the stock. So let's look at that. If the current price of the stock, hope I'm explaining this good. Let's just see if it fits his criteria. Normally, if we're buying something out there, I normally go about 75 delta, right? 75% probability of being in the money. Let's see if it fits his criteria. So he's saying buy one where that break-even price, 151.80, is not greater than 5% of the current price of the stock. So let's go 145.96 is the current price of the stock. Let's multiply that by 1.05. See where that price is, 153.25. So you see the break even here is 151.80. So it's not greater than 5% of the price of the stock. So that does fit the criteria. So we could easily, now the problem is we're going to have to pay $6,180 to buy that stock. But what he's saying is, hey baby, Apple's a good company, and I believe in the next 2 years that Apple's going to go up. And I'm further saying, hey, don't do it until you see Apple, crater on the day. I mean, a big move down, 5-10% move on that when we get a correction. Could that happen? Yeah. If it doesn't happen, guess what? I'm not putting on the trade. So we're using the ebb and the flow of the market to put on the trade. Now, what would you and I normally do after we do that? Rick, what would we normally do? Can you talk, Rick? After we bought an option, what are we going to do against that?
You're gonna sell against it.
Yeah, I'm going to sell stuff against it to pay for it. But in this instance, remember when we were doing the diagonals, and that's what this would be, a diagonal beforehand, we were buying the long and then automatically selling the short call against the long call. Now, he doesn't do this. That guy does not do this. He just buys leaps. He does not sell options against those leaps to help finance it. So if you're long on technology and you're long on Apple, and I guess you could do this on the Qs too, right? So the Qs, or you could even do it, well, I wouldn't do it on TQs because the option liquidity and volume are not there. But on the Qs, you can certainly do that too if you're just going to do technology in general. Then wait for the Qs to have a big rundown. So we could look at that too. Let's see that. Let's say you don't want to do individual stocks. You just want to do NASDAQ technology in general with the technology heavy NASDAQ. So you could do that on the Qs as well, right? You could go out, see where your strikes are. Now the problem is, the Qs are higher than Apple, right? Apple's at 145. This is at 365. So you can go out, January 23rd, December 23rd, 865 days. And because the price is higher, you're going to pay more for that option. But nonetheless, I'm trying to just, well, I say you're going to pay more. Let's see what it would be here. About a 70% probability being in the money. Let's see what that's going to cost you. It may not be as bad. 70 to 75. Here we go. So if you're in this area here, yeah, see, that's going to be a big meatball, isn't it? That's a big meatball, because then you're going to be paying $14,600. But so let's go back to the Apple situation. We do it in Apple. Then what are you going to do? I would not automatically sell a call against it. What would I do? I'm going to use the ebb and flow of the market to make my decision. So the next time you're going to go out and you're going to sell an option on Apple. Now, how often we were doing them 7 days out, but you don't have to do that. You can do a month out. You could go, hey, I'm going to do tasty trade 45 days out. So what I would then do is wait for Apple to be up on the day. Maybe Apple is up 0.5%, or maybe Apple's up, 1% on the day. You go, hey man, that's a good positive move in the market. So we're going to use the move in Apple on an up day to sell a call against the option that we bought. So then you could go out and maybe go to 33% probability of being in the money, which is kind of at the money, and then you could sell that option on a big up day to collect premium to apply and reduce your basis against the long option that you bought. So kind of a cool thing, right? I mean, if that's your cup of tea, you say, man, I'm going to retire early, like old boy said with Leaps. Well, all he does is buy them. He doesn't sell options against them. But you and I know the power of selling options and reducing basis. So wait for a big down day to buy your Leap in anything. I mean, it doesn't have to be technology. You could, if you like Chipotle Mexican grill, God forbid why you would like that, because that is the most bland food on the planet. It's a millennial favorite for some reason, but it's just horrible. I mean, it's just bad food. It's just bland. And, you could do that, or whatever, the underlying is. Now, keep in mind, the lower the price of the underlying, the less that option is going to speak to you. And not all companies, not all tickers have Leaps that are out, 1 or 2 years. But if it's something you really believe in that's going to go back up, I would think Apple in 2 years would be up, buy your Leap. And then on big up days, sell calls against it. So that's the premise of the book, other than the selling of options. But I love that strategy in general. So yeah, because Leaps give you leverage, right? It doesn't take as much money as it does to actually buy the shares. And you got 2 years or so to let that thing come to fruition for you. Now, it does have negative theta, and it does have, decay in that option. Great thing is, though, by being out that far, the decay is maybe cents on the day, and it's not something significant. So that's a good way to get a little leverage in your account, to use something that you believe in, a company, maybe in tech, in whatever you think is going to be stronger well into the future. Questions on that? I mean, it makes a lot of sense, right? Because what you and I should be doing is buy low, sell high. And sometimes what we do is we do that in reverse order, which works just as well. We sell high and buy low. But I love the premise of doing that. All right, today is August the 2nd. We need to do something really, really important. So let's go back to our charts. Let's see what the market's doing. It recovered. It always recovers. Buy the dip, buy the dip. So now we're back to the point. You see our AD going up. Here we are, a little bit of resistance now at the overnight low, where it's popping its head up against. But you and I need to do one of the most important things that we do together, and that is draw a big green monster. I bet Matt spent all weekend drawing big green monsters. So I go to my clean chart, and we need to do it in ES is the primary thing that I follow. So let's do it in ES first. Let's draw us a big green monster. Oh man. Any questions or comments about the book Intrinsic? I think you'll like it. Just, I gave you the entire premise of the book though, which is, let me hide my orders here. Hide orders. There we go. Show orders. All right, so now we've got ES. And you see this is the monkey bars. This is monkey bars. Let me share this clean chart with you so you can open it up and it'll have it for you. Let's see, share grid. Share. And I'm going to paste this in chat for you so you can open it up in Thinkorswim. Chat. Control V, just do Control C to copy it. Now everybody's got this chart. All right, so first thing I'm going to do is you need to make sure, and it should be the same when you open it on mine, 3-month, 1-day chart. And if this is the first time seeing this, y'all are going to say this is voodoo, and I will agree with you. Blake Young taught us how to do this, and this thing is masterful at showing you where price is fairly priced and where price is oversold and overbought. So let's go through it. Here's our ES chart for the month of July. And then you see what has happened in August right now. So started up a little higher. Now, let me briefly explain to you what the monkey bars are. On the left side here, this is what we call volume profile. So this shows you that during the month, this is where this little purple area is where the most volume of contracts traded on ES. So where is that? That's at the 43.49, right? 43.50 is where the most contracts traded. Now, on the right side, this is something that is called market profile. And market profile tells us the number of days or the amount of time that price traded at X price. So you can see the most number of days where that little green is was actually traded at the same exact price as the most volume traded. That also happened during the month of May, but it did not happen for the month of June. Notice for the month of June that most volume traded up here, where the most time traded down here. Isn't that interesting? So what we're doing is going to use this side, market profile, we're going to use July price action to project levels onto August. Now to do that, and let me tell everybody where you can go in depth to find this. If you'll just go to YouTube and search for Sweet Bobby Voodoo, VOODOO, there's an entire class that I taught on this. Now, this is not my baby. Everything that I do is really a copy from someone else, whether it be Lacello and me making my tweaks to it. This is a Blake Young thing. So what I've done is I have gone and changed my Fibonacci retracements, and I've made some changes to those values. So if you've never done that or made the changes, you can watch that video to tell you exactly where to make those changes. So what we're going to do is we're going to use Fibonacci retracements, and I'm going to draw it from, you see this very first little level down here where that 2 is? I'm going to put my little marker right there. So I'm going to draw it from the low, and then I'm going to draw it to the high, about there. Beautiful. So notice that the levels are 200, 180, 150, 120, 180, blah, 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 blah. These are not regular fib levels. So what you got to do is you could draw that, and yours is going to show the fib levels. And then you go in and just basically change these coefficients to what I have from 2 all the way up to -1. All right, so let me move this on the side because I don't use fibs, use this, so I'll leave it just like that. Now, if you make these changes and you say, Bobby, that just stinks, I'm going to go back to the fibs. All you got to do is go reset to factory default. Okay, but I have saved this as the default. So now I'm going to make sure that I've got this thing perfectly grounded. So what you want to do is put your cursor anywhere within the month of June and get the high and the low. Everybody see the H and the L up here? Just making sure you get it. So the high is 4422.5. 4422.5. Okay. And what is the low or the begin point? Go up there. The L is 4224. Now make sure you're not here to give you the numbers for May, and make sure you're not just, you got to make sure you're hovering over the July area. And so the low was 4224. Let's go do that. 224. There we go. Okay. All right. Now, this time we see that, I always say we do that. It's 81 in Carrollton, Georgia. All right. So now we're going to do something. We're going to look at this 50% number, and we're going to use the Fibonacci retracement now instead of the extension. So I'm going to change this to this little tool here, the Fibonacci extensions. Same thing. I have made changes to this, and you'll see those numbers in just a little bit. So now I'm going to draw from the 50% line, see it there, 50 from that little dotted line, up to the center of this little green line, which is, the point of control. Now, when I say the center, I don't mean the center this way. I mean the center vertically. So let's draw it. We're going to go from here to one click to the center of this one, click. And then finally, my third click is going to move up to the 0 line. See this 0 line? So I'm going to move that up to the 0 line and get it right there. Beautiful. All right, let me close this crap. What are you doing there? All right, so everybody saw that. So I drew from the 50 to the middle of this to the 100. Now, if your 50% had been above the little green point of control, you would have drawn from the 50 down to the middle, and then you would have drawn down to the 100% line. Okay, doesn't matter. These all are the 0 lines, 0, 100, 200. It doesn't matter. They're all 0 lines. So you would have drawn from the 50 above down to the point of control, and then down to the 100 line. All right. Nobody's tuning out yet, because I promise you'll get it after a while. It just takes a little bit of practice. So now what do you do? All right, so now I want to right click on our big little monster over here. So I'm going to right click anywhere on it, and I'm going to activate it. And we're going to drag it. And we're going to take the 0 line, and we're going to move it up to the 200 line. 0 to the 200. So let's do that. So we're just going to left click, hold down, and we're going to move it to where that 0 line is right on line with the 200 line. Close enough right there. Then you're going to take the 100 line, and you're going to draw it up to where you started drawing that retracement there. So the start of that little pink line. See that little pink line that we started? Remember, that's where the original 50% line was. So we're going to move this up to where it touches just the bottom there. All right, so let's go get it in the corner. We'll drag that corner, drag it with the left button up, and we'll get it right in line. See, right there. Boom. Hit the escape key. Now, we need to get rid of this 100, 200, that little deal. So I'm going to right click on that, and I'm going to remove that drawing. And now we're left with this nice little drawing here. Now, this is the thing Blake doesn't do that I do, because I call it the big green monster, and I right click and I edit it. And I'm going to name this. I wish Blake would do this. It saves him a lot of times because he forgets what he draws sometimes. So I'm going to call this July for August. July for August. You can call it anything you want to. So we use July price action, actual prices, to project August. And then we're going to set the color for all curves at green. Now, if you want to use pink, whatever, blah, 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 use whatever you want to. So now we have created the big green monster. Now, what does this tell us? Well, on this screen, it doesn't tell us much. So what we do is now we go down and we're going to use this on something called volume profile. Now remember, this left side here is volume, right side is time. So now we're going to look at this on a volume profile chart. Again, this is something Blake doesn't do. He doesn't use volume profile. He doesn't go and look at this. This is something that the way that I like to use it, and it works out really, really cool. All right, so let's see what we're seeing here. So here's, let's do ES. Well, this is SPY. We're going to redraw it for SPY. And let's go /ES. All right, here we are. Ta-da! So what does this show us? This is a 30-minute chart over the last 10 days. So now, green monster, market profile. This over here is volume profile. So let's look at volume profile first. Over the last 10 days, dear friends, this area, the red line, is where the most volume has traded. Okay? Most volume is traded here. So this is the volume point of control. Then you got one standard deviation above, standard deviation below. So see, there wasn't a lot of volume traded here, wasn't a lot of volume traded here. And you'll see that this kind of acts as a magnet to price. Now, this will change over time depending on where volume gets traded, right? But right now, this is the point of control. And notice that price is at its point of control already. Now, let's look at the big green monster. What does the big green monster tell us? The big green monster tells us, I hadn't drawn the butt lately. Let's draw the butt. All right, what color do I want? I want to do that color. All right. Where is the big green monster? First of all, you look for any 50%, like 50, 150, negative 150, the 50 line. This is where price is. Price is here, and we see that it's in a 50 line. So what this 50 line is, I hadn't drawn the butt in so long. Here's the butt. This is what we call fair value. So as you can see now, price is within a fair value range. All you got to do, look for the 50% range and figure out the range. Now, if price were down here, we would also say that it was fairly priced because this is a fair price area as well. Another one. So there's several fair price values. So right now, we would say that price is fairly priced. It's within a fairly, a fair price zone. Let's throw those all out. All right. Now, we also see that I use moving averages. The green is the 20 moving average exponential. The blue is the 50, and then the 200 period moving average. So we see that price is below the 20 and 50 and above the 200. That'll come into play when we start telling you about bang. But right now, if I'm looking at price on the ES, y'all, and that's the main thing that I follow, right? It is the market. It's the 500 largest companies in the U.S. It is fairly priced, and it is at the 50% line. You'll notice these two areas, the point of control there and that 50% on market profile, are about dead on. So price cannot get any more fairly priced than it is now. All right. Now, what happens if price, let's make that smaller. What happens if price does this? What happens if price goes into this area? Well, this is the area right here. That little, see those, that green line and that green line between the 80 and the 100? If price goes into that area, we say that that is oversold. All right? That is oversold. So what happens then if price goes from this area and goes down into this other little period? Then this is, it's going to sound strange, just trust me on it, overbought. So if price goes from fair to here, it's oversold. If it continues going down, it is overbought for this next fair value range below it. Make sure everybody knows what we're doing. So the 50s contain the area where price is fairly priced. This is an area that is overbought. this is oversold. If it's oversold, we expect it to go back up into fair price. If it continues to go down, then it's overbought. Price becomes overbought for this fair value range. And then what happens if it goes down below even that? Then it becomes oversold for this fair value range. So you got to know all the ranges on here are either fair value, overbought, oversold, and they just repeat, 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 repeat. So price is fairly priced. You can say, man, Bobby, this market's out of control. It is up, it's huge. No, 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 no. On all the factors that we see on price action right now, price is fairly priced. Isn't that cool? Even though everybody's saying price is too high, it's got to come back. Well, not necessarily. Now, let's go to one other tool that you and I use. Any questions on that at all? Isn't that fun? I love that. So let's go to another tool that you and I have, and that is trying to explain all this stuff to you. So when you hear big green monster, this is what we're doing. Big green monster. Is it important? You dang right it is. Now, you cannot be a believer. That's fine. You know, a lot of people don't believe in, whatever. Just watch. Just sit back with pure skepticism and watch. Watch what this thing does. It's really amazing. All right, so let's go to another thing. Remember, we think we're going to have a big old crash at some point. I'm gearing up for it. I'm getting ready. Well, we have something else that is a tool. Again, not developed by me. And again, just something that I watch, and that is the Skewdriver. So let's pull up the Skewdriver. There we go. So this spreadsheet is in our Discord channel, and it is under resources. So you can pull this up, and you're going to make sure what you're doing is we're looking at SPX, price of SPX. And Rick showed me the guy that he thinks, let's see if I can see this, Rick. Hold on a second. That came up with this thing. Okay. So here's the Skewdriver. This was a Scott Rubel from Strategium Trade. He kind of noticed this. And what he noticed is if you go 30 days out on a 20-point wide spread on the put side in SPX, he would always look for the option that's trading $5.20. And he started noticing something. He started noticing that, like today, if you go 30 days out, you'll notice that the 20-point spread in SPX is trading, the one closest to $5.20. This spreadsheet automatically does it for you, is about 33 points away from the market. Now, here's the cool thing about this. As this gets closer to the market, the spread that trades for 520 gets closer to the actual current price of SPX. Then, for example, when it gets under 20, that's kind of abnormal. So right now it's in a normal range of being, negative 25 to negative 35 or 40. So this is negative 34. So if we were to see this number as negative 20, that gives us some indication that the skew in the options is telling us that a drop is coming. If this number gets to be about 15 points away from the current price of SPX, then guess what? That means it's coming sooner than later. So you kind of watch this number and track this number to keep up with what skew is doing in SPX it's just kind of a tail. It kind of gives us a tail for when the correction is coming. So as it is currently, it's okay. It's normal. So this kind of further confirms what you and I are seeing here. That price, ES, is certainly related to SPX. So we're saying that everything's fairly priced here, and we're saying that on the Skewdriver, we are priced at about a normal range. From 25 to 35 is about normal. Now, if you see this number move way down here, and all of a sudden the $5.20 20-point spread in SPX 30 days out is 86 away from the money, guess what that means? Just the opposite. That means if you see something down here, you can expect that the market is going upward. It's going to go upward. Now, I have also written about the Skewdriver in a 100 and something page document that is my trading plan with all kind of stuff in it that I will share with you as well. I've shared it to the regulars in the group, but you don't have that. I'll share that explains everything about the Skewdriver. But let's just look at it so you know how to see it here. Let's go to SPX, Skewdriver. So you're going to go to the expiration that is closest to 20 days out, or 30 days out, sorry. Just want to make sure you see it here on the trade page. So where would that be? That would be this expiration, 29 days, closest to 30. Now, if you want to double check me on this, then all you got to do is go to, instead of the spread being single, you're going to go to deep and wide, and you're going to go to 1 month times 4 strike. 1 month times 4 strike vertical. So now we're showing the vertical spreads that are 20 points wide. I say we're showing the vertical spreads that are 20 points wide. Okay, do it. Can't wait for my new computer to come. Maybe we'll be so. What is happening? How embarrassing. Let me go to something else, come back and see if it'll do it. We'll come here, and then Thinkorswim's just totally, there we go. All right, so we're looking for the one that's about, we know. That's trading for about 520. Now, in the write-up that I say, I normally check the ask price, but the spreadsheet checks the mid price. Either one is fine. Just make sure you're consistent in whichever one you do. So we're scrolling up, we're scrolling up, we're scrolling up, we're scrolling up. Actually down, but closer to the money. So we're looking for the one that's trading at about 520. And we'll go with the spreadsheet, the one that's in between. Hold on, I went too far. Here we go. So we're looking for the 520. So here we go around in this area. It's taking the mid price. I guess I could change that to, where do you change that to mid price? Nonetheless, which one is it saying? Let's go back to the spreadsheet. We'll just kind of see which one it's saying. It's saying the 43.65. So let's go back to 43.65. There you go. There it is. So that spread is the one that's trading at about $5.20 away from the market. All right. And so you just kind of start tracking this every day. So rather than having to go in and to do this each and every day, it's so much easier to let this little spreadsheet do the work for you. So what would you do? What I would probably do is create a new sheet, and I would go put today's date, so 8/2/21, and I would go, the Skewdriver today is 36. So I'd go, it's 36. Because one number really doesn't tell you anything. So then what you want to do is kind of track this every day, right? So then tomorrow, let's say 8/3/21, let's say that this thing is 29 tomorrow. And 8/4/21, then it's down to 19. So you can see that skew is moving in such a way to tell us, get ready. The drop is coming. When you start seeing this thing under 20. Now, does this mean that the market could not, crash right now? No, I mean, this is only a tail. We're looking for this for a tail to give us some indication as to what direction it's doing and what the skew in the options are doing. Now, Rick, this would be something really, really cool that I think would help you in your Rick trades as well. Just kind of keep this up, right? So when you start seeing this number getting lower and lower and lower, and the it's getting closer and closer to the current price. So if all of a sudden this was 14 the next day, would I be selling any type of put in SPX or a put spread in SPX? Oh, heck to the no. Because this is giving me some type of indication that based on the skew in the options, that trouble or a downward move is coming. Now, as it looks today, with me seeing it at 36, does that tell me anything? Not really. It just tells me it's in a normal range. About 25 to 35 is a normal range. But this is something that, to me is worthwhile. And Rick, I would encourage you, to start tracking this. I mean, because Rick, y'all, is making a living. The man is going to retire and he's going to make a living doing the Rick trade. Now he's doing some other things. He's doing black swan hedges, blah, blah, blah. But, he's selling something every Monday, Wednesday, and Friday. That he'll sell an option spread today that will expire on Wednesday. Now, that spread could go to hell in a handbasket. We don't know. But if I'm looking at the price action and I'm looking at the skew and the options, it's telling me that, you know what, I don't see trouble ahead based on the skew. And then when he goes into the big green monster that we just grown here, do I say it's fairly priced? So where would he be selling his option on the Rick trade today? Well, let's go put in a Rick trade right now. So let's go back. Rick, you correct me on anything that I'm saying wrong about the Rick trade, okay? But let's just look at it today. So let's go back to single. And let's do the Rick trade. Now, chances are Rick's not going to put the Rick trade on until the last 15 minutes of the day. Rick, is that normal when you do it?
Yes, sir. Last 15 minutes, sometimes after the market closes.
Yeah. So here he goes, guys. Here's what he's going to do. He's going to go the last 15 minutes of the day. And he's going to go down to an option that is right around 5% probability of being out of the money. So let's find that option. 5%. 2 days out. So we're going to Wednesday. So he's going to go about maybe the 42.90. It's a 5 delta and a 5% probability of being in the money. So he would sell the 42.90. I say he would, there we go. He would sell the 42.90, and then he's going to do about a 20-point wide spread, and he's going to buy 42.70. And Rick, that's about what you collect, right? About a 45-cent credit.
Yes, sir. Normally 35 to 45 is what I hope
for. Okay, so he's going to collect $45 for each contract that he puts on there. Now, again, he's not doing it now. He's going to wait toward the end of the day. And let's look at this. It's going to have, so he's going to get a credit of $42.74. Takes $2,000 in buying power. So what we've done is, now he's just doing this every Monday, Wednesday, Friday. Now, sometimes he doesn't do it because he's got a feel that something is amiss, or sometimes over the weekends he doesn't do it. Rick, did you do one Friday, just out of curiosity?
Yes, sir. I did one Friday.
Yeah, he did one Friday. So what we're trying to do now, and Rick, give everybody just, you did it last time, you give kind of the stats on those about, what was it? You've done 147 of these this year, and what was the stats?
Yes, sir. Yes, sir. I've done about 147 this, well, it's almost to 150 now, because I traded on several different accounts, and I've only rolled 6 times during the past 6 months, and most of those, 4 of those times, if I had held out, I would not have had to roll. But anyway, the times I roll, it came up to about 5%, which is what the probability of expiring is. It's a 5%, a 5 delta, or 5 probability of expiring out of the money. So yeah, it's been real good for me.
Now, the funny thing is every time I come in and do the trade, it all goes to heck, right? That's when it all falls apart. And last time was really, really strange, is that I did this trade and it did go against me, and I was unable to roll for credit. But that something was strange that day, Rick. I'm not exactly sure what it was. I think Ken noticed it as well too, trying to help Smitty roll his as well, and couldn't find the credit. But when you have rolled, have you had any trouble finding a credit when you rolled it out, if you've been tested?
No, sir. I had, other than the day that you had, and I didn't have a trade on that day, but other than that day, I've always been able to roll for a credit. Sometimes I could roll down as well. So
Okay. All right. So that's one. So I don't want everybody just rushing in to do the rig trade. But what I'm trying to say is if you're doing a trade, that you're looking at, selling and collecting premium in something that's related to the market, SPX, SPY, E-minis, the micro E-minis, then we're trying to give you a couple of tools to help you make those decisions. One of them is the big green monster. So for example, if we look today and we said that price was overbought, if it was in this area, then that's an area when Rick might say, if it's overbought, what's the tendency to be? A good pullback into a fair value zone. So maybe if price is overbought, I'm not going to do the Rick trade today. So we're trying to give some tools to assist us in making those trading decisions. So you imagine if you could just save one stop out. I mean, you could, we're trying to increase even your percentage of win rates to those areas where you don't have to roll or you don't have to defend the position. So what could you do? You could say, yeah, it's fairly priced. We're also looking at the Skewdriver. Skewdriver is giving us a clear indication that it's normal. It's in a normal range right there. It's at 32 out of the money. So yeah, it looks like a day that it's clear sailing for the Rick trade. Now that doesn't mean that trade's not going to go to full loss and you're not going to lose $2,000. Now I do want to bring up one other thing that we could do, Smitty. So I mentioned this to Smitty as well. So what if you say, man, that $2,000 is really too much risk for me? If I lose $2,000, man, that's gonna cripple my account. What could you do? What could you do? You could. Now the only problem is it's SPX though, and you could have a gap that would go down below your stop. But is it possible that you could, put a stop limit order to close the trade if it went to a 2x loss? That's possible. Rick, let me just ask you this, Rick. Do you have any feeling, because Rick's normal modus operandi is to let that trade expire worthless. Rick, have you noticed how many times you're down 200% on the trade? Like if you, sold something for 50 cents that you're down 200%. How often does that happen?
I haven't paid that much attention to it, but there are some days, such as the day that you had, that yeah, you're down pretty significant money. It would have been over 2x loss, and I don't know. I just held on, and again, my I roll whenever it reaches the short strike. So yeah, there are days that it's down over 2x, and you could, and yes, you could lose, or in my experience so far, I have not lost one that's over 2x. I've had to roll, but I haven't lost.
Right. And even on the day, y'all, that I was unable to roll for credit, what did I do? I closed it for a loss that day. And the good thing is, now this is going to sound terrible, I took like an $800 loss on the day. Had I done nothing, guess what happened? Rick, this always happens, right? Had I done nothing, it would have expired totally worthless and I would have had zero loss. I would have actually made my $50 for the day. That's the way it goes. You don't know. So the great thing about the Rick trade is it is a defined risk trade. What Rick does is, let's say you're selling that 42.70. If price were to get down to 42.7, or I'm sorry, wherever it was up here, the 42.95, he's selling that one, or the 42.90. When price gets down to the 42.90, then he's rolling that spread out to, say, from Wednesday to Friday. If he's not finding a credit there, he'd roll it from Wednesday to the next Monday and rolling it where he can find a credit. That one day that I was doing it, could not find a credit. I couldn't find it anywhere. So what did I do? I closed the trade, took the loss, and sucked it up, Buttercup. But what we're trying to do is to give you a couple extra tools to say, okay, what does skew in the option say? Skew in the option says, well, we're about normal. We're in that 25 to 35 range. We're not anticipating, traders certainly by the price and the skew in the options are not anticipating that a drop is going to be imminent anytime soon. And our big green monster, confirms that as well. Now, guys, keep in mind, you put on this trade today, can the market go and crash way down past his? Well, let's see where those strikes at. Can we go down? Let's just see where it's at. 42. If Rick did the Rick trade right now, so he's doing the 42.90 or 42.95. Let's find that. Where is that in the chart? 42.90. Here we go. 42.92 is that line. Isn't that interesting? That if price were to go down to that point, let's draw an arrow. If price goes down to that point, from here to where Rick's strike would be, then it's right at that area, which is the line of demarcation between fair value and overbought. So if it went and stayed into this area, what would we expect? We would expect another continuation down into this fair market area because price now is overbought. So could it happen? Yeah. Oh, could this happen? Oh, yeah, this could happen. But I do feel better now that I see that we've got most volume here, which kind of acts as a magnet for price. We're in a fair value zone. We're below these two moving averages, but we're above the 200. And skew is telling us that this is not likely to happen. So is it a good day to sell the Rick trade? Yeah, probably so. Proceed with caution. Remember,
those are some good objective criteria that you can use to decide. I mean, when you show the skew the first time, I've started tracking it. It's just been the third day, but I started tracking it, and yeah, that and the big green monster, yeah, that gives you some objective technicals to determine whether to get or not, and I appreciate that.
yeah, and that's what I wanted to come in today with, Rick, and just say, if anybody's doing the trade, let's get some objective qualifiers that will help us perhaps to stay out of that trade when something is remiss. So if this happened, let's see, let me clear all that. Hold on a second, y'all, because I think it is kind of neat, right? So if I open this up today and I saw that price, and again, draw this on SPX too, right? Draw your big green monster on SPX to look at it, but I like looking at the E-minis because it includes overnight information where the SPX does not. So let's just say that we're going to, let me fix this. Let's fix this. Pull this down. So if price were here today, let me draw it. If price were, where's my thingy majiggy? Here it goes. So if price of ES were right here, would I do the Rick trade today? No. Why?
Yep. Because it's overbought, right? So it's probably gonna pull back and go again.
Overbought. Because in my mind of mind, by being in an overbought range, what does that tell me? That tells me likely pull back to here. Now, the cool thing is, look at where the delta 5% probability in the money strike is, if it's here, do you feel comfortable doing that when there's going to be a pullback into there? Probably not. Now, if that 5 delta strikes down here, maybe you do feel a little better that we're not going to jump this area, this area, this area, and come into this fair value area. But then what do you do to kind of make that decision? You look at the skew. You look at the Skewdriver that is looking at the skew of the options to make some informed decision. So this way, we've now taken the RIC trade and got us some objective criteria, y'all. Okay, we're in this area. We're in the fair value area. We're at the point of control. Option skew, everything looks good. Probably a good day to sell it. Probably a good day to sell it. Then you can look at this in other days and say, well, if we're overbought, yeah, I think I'm gonna stay away because this thing might. Now, for those of you that are with us for the first time today, you're probably sitting there thinking, man, this is garbage. This stuff doesn't work until you start seeing how well this little green monster works.
Hey, Bobby.
Yeah.
One
Yes,
thing,
Stacy.
one thing to mention for this, the big green monster works on any time frame chart.
Yeah.
And Blake does these on a daily chart where you can look at yesterday's prices to project today's prices.
That is true. Yeah. So we, you could actually draw these things on a daily basis, like Stacy says and we make those, as he jokes, instead of big green monsters, they're neon salmon monsters, right? That's the color he uses for the daily chart. So yeah, we certainly could draw that for the day. Now, would that be helpful? Well, maybe we need to do that. Maybe we need to do that. So what we would do in that case, Stacy, we would take Friday's price action and we would draw that for today. Let me see if I can do. Y'all want to stay and do it, or y'all ready to go? I done took. Oh my gosh, is it 1:23? Y'all, I've taken y'all for an hour and 23 minutes. I'm sorry, I've kept y'all way long today. But we'll do that tomorrow then. We'll maybe draw a daily one. And what you would do is use a 10-day 30-minute instead of the. Let's see how I can do that. Let me show you how to do it. God, I didn't know I went so long. No wonder I was getting hungry. Let me go to this. I'm going to go to my plain data. And let's see if we can do that.
Hey, Bobby, I have another question, not to switch gears, but while you're doing this, because it's a down day, I recall you mentioning for adding black swan hedges, it's good to get in the shorts today, right? Would today be a good day to get in the shorts or the 3 multiples?
Let's see. So generally, if it's a down day, I like it to be a down day of 0.4% or more, and I don't think we're there.
Okay, got it.
Yeah, so if you don't, I would not enter into a black swan short tranche today unless it's down 0.4 or more. Now it may be later today, right? And if it is, then certainly you could do that.
Okay, that's really great to know.
Yeah, and don't buy complete tranches today either. If you're going to buy a 3-5, we only do those on up days. All right, so let's go back to the chart and see if we can do this. See if I can remember how to do them on a daily basis. All right, so this way we're going to go ES. Let's do SPX. We'll just do SPX and draw a neon salmon. Now, if y'all have to go, I apologize. I didn't mean to keep y'all so long. Your time is valuable. But let's show this. So here's SPX. Let's take this chart off because that's old now. All right, so here we go. Stacy, correct me if I'm wrong on this, but I think I'm going to go to 10 days and 3. Where's my little time frame? 3 months, 2 days, 3 months, 10 days. 10 days, 30 minutes. Ta-da! This should do it. I say this should do it. All right, here we go. So this should be, so this is 7:30. This is 8:02. So this was Friday. This is today. So we can do the same thing, right? We can use Friday's price action to project on to today. So let's see how well that works. So we're going to go there. We're going to start from the bottom on Friday. We're going to go up there. Right click. Edit. I hadn't done it for a daily in a long, long time, so I may be rusty. Got the right chart that I need. Stacy, correct me if I'm wrong. So I'm going to click on this day, the high is 44.12.25. 44.12.25. $44.12.25. Click back onto today. Look up to the top, and the low is 43.89.65. 43.89.65. I say 43.89.65. Boom, 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 boom. Yeah. All right. So I'm gonna click OK. Now what are we gonna do? Now we're gonna go to our other little thingamajiggy. We're having trouble loading my feed. Hold on. Gotta go to this thing. And we're gonna go to that little tool. So we start at the 50% line. Draw there to the middle and down to the 100 line. Boom, chicka boom. All right. Then we're going to right click on our big one and we're going to activate it. And now remember, we were going to drag the 100 to the 200. So now we're going to drag the 100, since it's down here, to the 200. So let's drag that. Got to get on there somewhere, somehow. There we go. So we're going to drag the 100 down the 200 line. Come on, baby. Come on, little darling. All right there. And then we're going to draw or drag the 0 down to where we started that little deal, right? To the top of that pink. So here we go. Doom, jacka, joom, 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 joom. Take that down there. Now, let's see what the 1 day looks like. So now we're finished with this little guy, so we can delete him. Delete him. All right. Now, here's how you keep them away, separated from the big green monster. Now we got the big salmon monster, neon salmon. So now I'm going to go, I'll just say Friday for Monday. I'll name this Fry for Mon. And then we're going to set the color of this one to neon salmon. Which one's neon salmon? I think it's that. Now, ain't that pretty? Now let's go to our SPX volume profile. Again, SPX won't have volume, but I think it'll still make it easier to see. We'll go to volume profile with our SPX. SPX. Let's see what the SPX daily chart looks like. All right, so now we're taking, let's move in a bit. Now, here we go. How cool is this? So now we're taking daily price of SPX, and we are fair value. It would be here. Now price is where? Price is just over the overbought area, and it's teetering. It is in the oversold area, right? You can see it's just barely into the oversold area. So, you know, if you want to go on the daily, go on the daily. If you want to go on the monthly, go on the monthly. To me, though, I find that I get bigger bang for my buck out of the monthly green monster rather than the daily neon salmon monster. That's just me. But yeah, certainly feel free to do this, because I mean, at the end of the day, if this were to be in the oversold category, which it is currently, then that gives me even more confidence on a daily basis to look that, you know, we're probably, if anything, going here rather than going here. Okay. All right, I see a question here. I'm going to stop the recording. Everybody have a great day. Love y'all, and see you tomorrow. So I'm going to stop the recording.